Hey everyone, this is Charlie Shrem, and you're listening to Untold Stories. This is a show where we dive deep into the lives and personal histories of some of crypto's most influential leaders and find out how the crypto movement truly came to be. Let's dive in. This is the most important episode to listen to. It's about taxes. Tax season is coming up, but this is not going to be a fear, uncertainty, and doubt. There is no fear. There's no negativity. This is only positive. On the show today, I had Clinton Donnelly, who is the founder and president of the Donnelly tax law firm. Listen, Clinton is the best accountant that I know of for crypto tax reporting, and we're very fortunate that he took the time out today to come on the show because this is such an important subject. He's an enrolled agent representing clients before the IRS. He has clients that are living in over 40 countries. He's got advanced law degrees. He runs a specialty tax law firm, does not turn away anyone. No return is too complicated. He's done over 900 tax amnesty returns with a 100% success rate, and he's written over 5 books about crypto tax returns. Some of the biggest celebrities, people that you know in the space, the biggest whales. We talked about who is the IRS going to go after? What's a small fish? What's a medium fish? What's a big fish? What's going on that starting in 2020, every taxpayer has to confess under oath whether yes or no they've dealt with cryptocurrencies in the past year? What's going on with that? Is that constitutionally legal? What type of things should you be concerned about? But really, what type of things should you not be concerned about? What is important when it comes to filing your returns? What's important when it comes to accurately reporting and paying? What is the IRS more concerned about? Are they concerned about reporting accurately or getting their money? A lot of good nuggets of information. And honestly, after doing this show, I feel a lot better. And you should too when you listen to this show. A great return defends you, and a good crypto tax return is one that is not easy to prepare. But a guy like Clinton, when you finish this show, you'll learn how to do it on your own, or you'll be confident enough to give him a call. He's got a very, very good attitude about taxes. He wants to work with you, and he wants everyone to do it the right way, but at the same time, realizing that you shouldn't pay the IRS one more cent that you legally are obligated to. It was a great episode. Give some love to the sponsors, and I'll talk to you guys just in a minute. If you're buying, selling, or holding crypto, you are a low-hanging fruit for the IRS. And for many years, I've been waiting for a good solution where I can be proactive in my taxes, but more importantly, to sleep at night. Before the IRS picks you for an examination, subscribe to our newest sponsor, TurboTax Audit. TurboTax Audit is an audit protection service designed for the needs of the crypto trader. That's you, me, and really everyone else. It acts like an insurance policy. Subscribers will get detailed instructions on how to prepare a great crypto tax return by yourself, including preparing the required anti-money laundering forms. If the IRS examines your crypto reporting on your tax return, the experts at TurboTax Audit will provide all the IRS representation and tax law research at no charge. The statute of limitations on a crypto tax return is 6 years. TurboTax Audit covers you regardless of what year the IRS examines, all for a low price of $97. Best of all, you can sleep well knowing that the best crypto tax gurus are ready to defend you. TurboTax Audit is a service of the Donnelly tax law. All new subscribers of TurboTax Audit will get a copy of the latest ebook, Does My Crypto Tax Returns Need Surgery? It's a phenomenal book. You get it as soon as you sign up. It's a short but super, super powerful book. While other services are reactive, TurboTax Audit are proactive and give you the tools like their crypto tax health check so you can reduce your chances of getting an IRS letter in the first place. No one likes that certified letter from the IRS. Donnelly Tax Law specializes in complex crypto tax return preparation. No situation is too complex for them. So check them out at CryptoTaxAudit.com. And listen, guys, start defending yourself today. Untold Stories wouldn't be here without the amazing production company Blockworks Group. A few months ago, I approached Blockworks Group and I said, hey guys, I want to do a show, Untold Stories. Can we make it happen? and these guys are the only event and podcast production company that I trust. Really, this show is powered by them, and it wouldn't be here today without the amazing work of the Blockworks Group team. So for access to all the premier digital asset conferences and to check out their other podcasts in their network that they produce, check them out at blockworksgroup.io. That's blockworksgroup.io. I promise you will not be disappointed. This is the most important episode you're going to listen to on this show. It's early January and tax season is coming up. And why that's important is because if you're in crypto, if you buy, sell, trade, hold, do anything Bitcoin or crypto related, this episode is extremely important. And we're going to talk about all the subjects and all the conversations that you've either been purposely ignorant and ignoring, or you've been dreading with anxiety. But our guest today, Clinton Donnelly. Clinton, thank you so much for coming on the show. You are the best crypto tax return preparer in the business. You have the cojones to do what every other CPA, in fact, the CPAs that I've talked to have turned me down. Thank you for coming on the show, and thank you for doing what you're doing.
I am so glad to be here, Charlie. I'm passionate about helping people because there's just such a lack of understanding of how to do a great crypto tax return, and it makes every crypto trader vulnerable. So I'm glad we can be talking and letting people know.
There's a lot of ambiguity. There's a lot of mystery, complication when it comes to taxes not related to crypto. So we have a lot to cover. Let's get right into it. The first thing on everyone's mind that they're thinking about right now is starting in April 2020, as of in April 15th, when they have to report their taxes, you have to say yes or no, and it's under oath if they've dealt in cryptocurrencies. And that's such a small question. Like, my mother-in-law may have to say yes to this because I've, opened up a wallet for her and given her $100 worth of Bitcoin, right? How is that? And now she's going to be added to a list that I'm on of all crypto holders in the country. How is that legal? How is that constitutionally legal?
Well, yes. The IRS has put into Schedule 1, which is part of the 1040, where you list your income. A question is at the top. You can't miss it. And it says, did you buy, sell, receive, send, or have any financial interest in virtual currencies during the year? Virtual currencies is their word for cryptos. And this is a sweeping thing. It is yes or no.
Airline miles too.
Yeah, that's true. So everybody. So there's two things you can do here. I mean, it's really like it's a reach. I think it's a violation of our First Amendment, Fifth Amendment, and Eighth Amendment rights. And I've written a letter and I've sent it to the IRS protesting this. But hey, it's not going to take the question off. Once you check yes, you go on a list of the people who are crypto traders. And guess what? If you were a crypto trader in 2019, odds are pretty high you were a trader in 18 and 17.
Yeah.
So so now you've put yourself on the list that they can go back and look. Did you report in 17? Did you report crypto gains? Did you report your any money laundering forms in 18 and 17? And it's just this is all. Their compliance at the IRS now is getting very sophisticated. It's all data mining driven, artificial intelligence.
Yeah.
And it's just so easy to shake down who the big traders are and go after them. And people think they're going to go after them by, calculating all these capital gains in their transactions. No. They take a whole different approach at coming after people. And it's so important for people to protect themselves.
What do they do?
Well, people like traders just got off the phone with
there's big fish and small fish, right? So let's separate the two. Maybe you want to talk about that first, and then we can hear about what they do.
That's really true. Everybody should consider, in the IRS's eyes, are you a small, medium, or large fish? A small fish would be if the most you ever had in the markets was, say, no more than like $20,000, $30,000. You're small, and those people are hyper conscientious, and they really want to do the right thing. But fixing your tax return is so minor it's going to generate such little income to the IRS that they're really not going to go after you. And for those people, we have a service. There's a service out there called CryptoTaxAudit.com, where for $97 you can get basically an insurance policy that someone's going to defend you if you ever get that letter from the IRS about how you reported cryptos, and you can check it out. But if you're a large fish, you have much more exposure. It's the IRS wants to go after big fish because the rewards are much bigger. And you're a big fish if, say, you had $100,000 or more at peak at any time in the market, and particularly if you were trading on foreign exchanges, which most people did. So those are big fish. It's easy for the IRS to identify you and come after you. They sent out letters to large fish in August of this past year, basically a letter saying, did you report your cryptos? They called it an educational letter. And I have maybe 15 clients who received these letters. And it's amazing. They were all in the $1 million or more holdings.
Sure.
The IRS knew who the big fish were.
Sure.
And a lot of these people, one of my clients, he did all his trading overseas. So the IRS knew he was a big fish overseas. So, I wrote a book about this, why crypto traders are low-hanging fruit for the IRS, and it gets into a lot of details. But if you're a large fish, it's very important by checking this new question that you need to have a bulletproof tax return. You need to be rock solid because the IRS has a long time to come after you. It's not like just because you got away with it last year, you got away with it in 2017. If you have a crypto tax return, your statute of limitations, if you filed it correctly, is 6 years. And since most people, I'd say 95%, didn't file it correctly, the statute of limitations is open.
This is my question, though. Like, can your tax return ever be 100% perfect and accurate? Like, is that physically possible?
Well, hey, a tax return is not like your high school math test where you're trying to get 100. Okay.
Oh man, this is a great soundbite. That's the first time I've ever hear anyone ever say that.
You just want to be close.
Brilliant.
You just want to be close.
Honest, right? You want to just be honest, have integrity. That's what I've always tried to do with my tax returns.
Hey, look, the IRS auditors are under quotas. They need to bring in monthly. I had a former IRS auditor work for me. They have monthly quotas they have to go after. They have penalties that help them hit it, stuff like that. But if you're pretty close, they know they're going to lose. They don't want to waste time on you. They want to move on to the next guy who's bigger. And and that's why most people think the IRS is going to audit a tax return by going through that long list of transactions to see if you calculated it right, FIFO, LIFO, and all. That's not at all how they're going to do it.
What are they looking for? Like, what are they looking for? Someone who, like, intentionally lied about a holding and then had an exchange account overseas and didn't report it? Are they looking for someone who reported, $60,000 in income by mistake instead of reporting $100,000, and that's just going back and fixing it? Like, can an auditor read the tax return and say, okay, maybe this guy made a mistake or this girl made a mistake, or read a tax return and say, no, this guy was intentionally being dishonest? The
IRS in the compliance and what we've seen in their public statements, who they really want to go after is the criminals. Okay. And for them, they have those blockchain analysis tools because then they can go after who was doing the dealings. But if you're just a large fish, an honest guy, a regular trader who's a large fish and didn't know how to do your tax return right, or your preparer didn't know, the approach on that is different. And it comes down to how the IRS can prosecute a law case. If they look at your crypto reporting, how you did each trade, there's a whole taxpayer rights thing in the law, and they have to do appeals and send letters and stuff. But if they use the anti-money laundering laws, use a different section of the code. It's not a part of the tax code, even though the IRS manages it. It's Title 18 and the Bank Secrecy Act. And from that, they can immediately go to prosecution and penalties. And it's much easier. That's the way they're going to come after you.
What people don't realize is that when I was arrested in 2014, I was actually arrested by an IRS special agent. I actually went on to being on pretty good terms over the years. I try to have respect for people that are just, kind of doing their job in that respect. But, so the IRS anti-money laundering, There's a huge overlap there. And so what you're saying is important. What type of things are they looking for? What are, besides for like my crime where there was money transmission and it was a company that I owned that wasn't tax related. What are some things that that the IRS is looking for, like tax related, when it comes to money laundering? Because it seems like that's something people should look out for at the top.
The major anti-money laundering law was called the Bank Secrecy Act, 1990. It created an organization called the Financial Crime Enforcement Network, lovingly known as FinCEN, and they're the ones that develop the regulations that are all banks, brokerage houses, money lending, money service businesses have to follow. And it's the FinCEN violations that got you, all right? And they applied FinCEN regulations against cryptocurrencies. And it's surprising. I'm shocked how much denial traders have, and even tax preparers have, that crypto people even have to report anti-money laundering. Some of them don't even think it's cash, that it's a financial asset. But for an individual, you have to report FinCEN Form 114, which is most commonly, endearingly called the FBAR, the Financial Bank Account Report. And you have to report, every crypto trader has to file an FBAR report and file a Form 8938, which is an overlapping tax money laundering form, came from the FATCA law of 2010. These are required unless you're a small fish. If you're a small fish, there's a filing threshold. You don't have to file.
What if you've never held like accounts overseas or even exchange accounts? Is this something you have to deal with? What if the exchange has a U.S. entity like Binance? Yeah, they're based in Hong Kong, but they have Binance America. Right. Isn't Binance America like required to do the reporting, not you?
None of the U.S. exchanges are under full regulation of the SEC. All right. So if they were, then that reporting would be done by them. But since they're not, you still have to report. And here's the second. So
I feel like that would be better. Wouldn't that be better? Like if you have a brokerage account, it's your brokerage that's required to do all the tax reporting for you. Isn't that so much easier? Or would you rather it be, as an accountant, that traders themselves are reporting it on their own?
Oh, absolutely. What you're saying is right. And that's where we're headed. And I think for a couple different factors, but there's been an international regulation, and the U.S. has said they're doing it. They're going to force all U.S. crypto exchanges to comply with the all banking and brokerage regulations, which means that at some point in the future, you'll get a 1099-B, just like you do from a brokerage statement listing all your trades, what you bought it for, sort of. It'd be very easy for your tax returns then. We're not there yet.
I feel like that would be such a pivotal point for Bitcoin and for crypto, because that is such a big, like if I could tell a friend of mine who wants to buy Bitcoin, yeah, you go on this exchange and then don't worry about because, you see all the headlines, IRS, you see government taking people down. If you can go to an exchange and know that exchange is going to be sending you that form at the end of the year and the government, I feel like a lot of people would trade more comfortably that way. Because not everyone wants to be their own bank, right? Not everyone is an anti-statist or whatever. I don't know what you call the term, but some people want that comfort, and I understand that, and I do get it. Like especially just non-tech people.
Well, we're definitely headed there. There's an exchange called Robinhood, where it's totally insulated. You cannot do transfers in and out of Robinhood. You have to bring cash in and only cash out. Any coin stays in Robinhood. As a result, they know what you bought it for. They know what you sold it for. And they can generate a 1099-B. They're very close to doing that. I think the Uphold exchange is getting close to doing that. But as long as you can move coins from this exchange to that exchange to the other exchange, then the exchanges don't know the buy and sell prices, and they cannot give you that type of report. It's a term called a covered trade.
Oh, it's a good point. If they don't have that content, then how are they supposed to issue a report?
But you're right. I think trend-wise, what we're going to see is as you have more and more people getting into, crypto trading becomes more mainstream. They're going to demand this. They're not going to accept anything with the chaos that we have now. And as a result, you're going to get, Fidelity is going to have a crypto exchange. Merrill Lynch is going to have a crypto exchange, and it's going to be all inclusive, or how can I say it's excluded, like Robinhood is. You cannot trade between exchanges. That's where we're headed. And in that case, because then those will be regulated, SEC regulated exchanges, it can be very attractive, and it's be very mainstream. There's probably some downsides on that too, but I think from a tax point of view, it'd be very attractive.
Clinton, a lot of people are simply, when like you don't understand something, you become hostile to it automatically when you're constantly trying to understand something over time, and you can't, and you eventually, that's why there's a lot of hostility still towards crypto, because simply people don't understand it. And why I'm telling you this is, if you look at if you do like a Google search and you type Bitcoin taxes, right, or crypto taxes or IRS Bitcoin, it's all negative. It's negative. It's fear. It's uncertainty. It's doubt. It's scary. There's no clarity. And I think that's one of the reasons that a lot of people just simply say, like, okay, if I don't get it and it's too complicated, how is the IRS supposed to get it and be too complicated? That's the wrong mentality to have, right? Like, you need, just because something is scary, if you're in our space, if you're in our industry, you have to pay attention to your taxes. But the problem is that a lot of CPAs that I've went to and other people went to, they either say, like, I don't want to touch this, or they make you more scared. You know what a lot of CPAs are doing now? They're saying, hire me for my hire our firm to do your tax return is not a normal return. It's the word for it. It's where they have to go deep dive into it. What's the term I'm looking for? Like forensic. We have to forensic do this now, so it's more expensive. So they're now charging more money because someone's in crypto. Why are good tax preparers so hard to find? Why is it so difficult to do it? And why are the ones that are doing it feeling they can like gouge us?
I'll tell you why. Because a good crypto tax return involves not just general tax preparation skill. You have to have accounting skill to do the reconciliation of all the trades, but you need to have legal skills, because the anti-money laundering forms are very much law oriented. And when I do a tax return, I call it a great crypto tax return. Not only do we report all the income, we report all the anti-money laundering forms, we report any Ponzi scams or financial scams where you lost money, because you can itemize the loss and reduce your taxes. If you have like ICOs and dead coins and junk coins that went nothing, we can declare a loss on those and bring in some savings. But then I also most clients that come to me, we have to go back and fix a couple years worth of returns. So we do a tax amnesty form, because if you report the anti-money laundering forms after the deadline, which is the same day as taxes are due, it's a $10,000 penalty.
Wow.
So it's a $10,000 penalty on the FBAR and on the Form 8938. And for each year, that's $40,000 worth of penalty. And we can avoid it with tax amnesty. So it's a law thing. So here's
penalties are high too. I know traders who honestly went back and paid tens of thousands of dollars in penalties just because they messed up, like how they reported it or the number was not correct or whatever. So penalties are a real thing. It's not like a few $100. It's like a significant amount of money.
Oh, exactly. And this is let's be blunt. The IRS is going to audit crypto traders. When they nail them against the wall, it's going to be because of violations of the anti-money laundering regulations, not because you didn't, add up 15,000 trades correctly. Here, and because the point you just
made.
Like
what are the top 3 like regulations you think they'd go after? Not reporting your Bitstamp account?
I would say virtually every crypto trader has what I call a Schedule B problem. Schedule B on your tax return is the one where you list your interest and your dividend income. And at the very bottom, it has this question in part 3. It says, did you have a financial interest in or signature authority over a financial account in a foreign country? Yes or no? Now, of course, like Binance, in Malta or whatever country it's in, that's definitely a financial account in a foreign country. It's hard to say it wasn't. So most people said no to that. In fact, almost everybody says no to that question, because U.S. tax preparers never deal with people who have foreign assets. Because the U.S. is so big, everybody has all their bank accounts in the U.S. Everybody checks no or leaves it blank. So the next question after that is, are you required to file the FBAR form?
I've avoided like opening an overseas bank account for this specific reason. Just A, because I don't need one, and B, because you'd have to deal with more compliance yourself.
So I got a to-do for you, Charlie.
Okay.
After this call, you whip up your tax return, you look for Schedule B, you look at the bottom and see if you answered yes or no to those questions.
See,
If you
I'm in a
answer,
very fortunate position, though, because when I was arrested in 2014, I actually failed compliance now at almost every exchange. Like, I have no exchange accounts. So I'm like in a good position with that. My taxes were easier to do because I just did. Yeah, it's seriously, it's like a blessing in disguise. I've tried to open up, even some of the sponsors here, I can't pass their own compliance. So it's pretty funny.
So all our listeners should, first of all, look at your past tax returns and look at Schedule B at the bottom. It says, did you, yes or no, have a foreign financial account? And then it says, the next question is, if you answer yes, are you required to file FinCEN Form 114 FBAR? Please see the instructions in the form. Yes or no? Now, this has gone to the U.S. Supreme Court, and the U.S. Supreme Court has said that question, as it's worded, and it's been in there for like 15 years, is sufficiently instructive that every taxpayer is under obligation to file an FBAR report. People cannot use the excuse, I didn't know, I didn't have to. Now, the fact of the matter is, we can get away with tax amnesty on that argument. But if they take you to court, they can nail you against the wall. This is how crypto traders are going to get come down, because they're all going to say no to that. And this is very black and white. There's no, well, I don't have all the transaction records, and there's no excuses in song and dance. It's black and white. You said no, or you left it blank when you should have said yes. You're nailed. There's no further discussion. Plus, since that part is a Title 18, the Bank Secrecy Act, they can go immediately to prosecution. That's perjury for answering yes, because when you sign your tax return, it says, under penalty of perjury, I affirm that I have read my tax return and I agree that it is true, complete, and correct. And then you sign your name. That's what happens when you sign a tax return, which means that's perjury. This is a Schedule B problem. So how do you fix that? Well, we do the tax amnesty. We file the FBAR form, the 8938. And on the 8938 is where you define foreign assets. How does the U.S. government define a foreign assets? Well, the Internal Revenue Code, section 6038D says a foreign asset is any, I'm quoting, financial instrument or contract for investment purposes where the counterparty is not a U.S. person. Well, hey, look, the beauty of an exchange, even a U.S. exchange like Coinbase, is you don't have to know who you're trading with. You may very well have been trading with, terrorists from Syria. You have no idea. All right, even on Coinbase.
I have a very stupid question. It's such a dumb question, but I'm going to preface it with a short analogy. If I own a large farm and I have multiple farmers that are leasing my farm, and the deal is that they have to basically pay me a percentage of their revenue, and let's just say it's a lot more complicated than that. They have, like, based on how many clouds are in the sky. If it's a non-sunny day, then their share of what they have to pay me is less. I'm just saying, let's just say it would be in my best interest, and I would be super highly incentivized to build a system to make it as easy and simple and without any loopholes or without any complications for those farmers to report that. Now, wouldn't you think that at some point in the last 10 or 20 years, the IRS would say, hey, maybe like the reason that people don't like us is because we're so complicated to interface with. Maybe the reason people don't like us is, yes, no one likes paying taxes, but it's something that you're born knowing that you have to do. So why not make it simpler, right? Not talking about tax law, I'm talking about filing your taxes. And then you have this like behemoth, like TurboTax is the only one. And even there, kind of sucks. Why hasn't this been done better? Why hasn't this been simplified?
Well, the blame is not the IRS. The blame is Congress. Congress
Why?
writes the laws. Congress writes the laws. Congress makes everything complicated. It works this way. You want to have a tax system that's sensitive and understanding to people. So you say, if we can say, let's take a flat tax. Imagine you just described the simplicity of a flat tax. Write
Sure.
down how much money you make, multiply it by 20%, give it to us, right? Flat tax. And we actually have that in place right now. It's called the alternative minimum tax. But what the Congress says is, yes, but lower income people shouldn't have to pay so much. So let's have some deductions and incentives. And let's give them a child tax credit for how many children they have. And people with more children need more credit. Oh, yeah, and let's add this in there. And if you make over a lot of money, maybe you should be paying a little bit extra. And we put that in there. And you listen to every single one of these explanations, and they all sound great. They all sound really sensitive and meaningful. But the complexity layered on top of one another and then jiggling them every year, twist them a little bit, it becomes inconceivable. You cannot understand what's going on. It becomes too complex. People come to me and say, can you estimate how much taxes I owe? I have no idea. I could never estimate it. I mean, the tax law, it's just so complicated in different ways. Everybody has a different situation. So it's really Congress. Let's talk about TurboTax and Tax Act and these tax software packages.
Yeah, let's do it.
Because 45% of Americans use those, and they expect it to grow significantly. These packages have what they tout as a feature is a audit guarantee. They say, if you get audited, we will defend you against any calculation errors.
Yeah, but it's stupid because anytime you do anything relative like that can't be answered by yes or no question, that audit guarantee goes away.
Well, what they do is they don't. Hey, those packages are really cool. I've used them in my younger years, and
Sure.
they're easy
Me
and
too,
fun.
actually,
And they
yeah.
do things, But the thing is, what they do is they don't ask questions that they don't want to deal with. All right, so they don't ask you complicated things. Like I mentioned, the Ponzi. I don't know if the Ponzi scam. So if you have a financial scam, there's a whole treatment that you can get a break on that. Guess what? TurboTax, Tax Act, they do not touch it. Why? Because they don't know how to ask the questions correctly to generate the right results that would keep their audit guarantee safe. And so as a result, they don't mention anything about it. So once your return starts to get complex, and all crypto traders have a complex return, trust me, TurboTax is not there for you. Just not there. And another thing, a lot of I just realized this today. A lot of the lower end commercial, the professional tax software that a lot of tax preparers use. It's just looking at two of the major packages do not even support the FBAR form. They don't support it. They cannot.
So that's what I mean. If you have anything related to like complication or crypto, a lot of that audit guarantee kind of like goes away.
Right. I came out with a video and I put it over on the CryptoTaxAudit.com website where it is this video that shows you how to take TurboTax and basically hack it by adding in additional forms and typing in data so that you could actually use TurboTax to create what I'd characterize as a great crypto tax return. I show you how to file an FBAR form manually and do the 8938. These are all things you have to take TurboTax and then slightly unscrew the covers and slam in some extra forms and print things out and mail it in. But I created
so you really have to be hacky with it. Yeah.
Yeah. I mean, I created it because, not enough people can afford me. If you're a small fish, maybe medium fish, you might not be able to afford me. And there's not enough people that have the skill I have. I'm daunted on why that is. So I've created tools I can put in the hands of tax preparers, individuals, so that they can do the good job in a way that they can afford. I mean, clearly it's complicated, but I'm putting tools into people's hands to help as many people as possible.
Are you worried about that dreadful certified letter from the IRS? Are you worried about the IRS auditing your crypto returns? Then you need TurboTax Audit. They provide IRS audit defense designed for the crypto owner. Subscribers will get detailed instructions on how to prepare a great crypto tax return by yourself, including preparing the required anti-laundering forms. Subscribe today at CryptoTaxAudit.com for $97. That's CryptoTaxAudit.com. If a trader goes to their accountant and is dishonest with their accountant, and the accountant files the return, the accountant's not on the hook, right?
No, not at all. So
then I still don't understand why a lot of accountants are afraid to touch crypto returns.
Well, this is an interesting year because of the Schedule 1 question. Did you have cryptocurrencies? That they have to ask. And when they do ask it, then the accountant is on the hook for, well, tell me about that. Let's report it. All that kind of stuff. And most of them don't know what they're doing. So it's a scary year for for doing your tax returns, because tax preparers are going to have two reactions. One is they're just going to check no and not even bring up the topic, or they're going to check yes, and maybe just dump you if you checked yes. They're not even going to touch it, or put the entire burden on you to tell them what they have to file. So, tax preparers are scared, and there's going to be a lot of errors, and the IRS is going to have a field day. Hey, the IRS is the money-making arm of the U.S. government. If you think about it as a business, and they're losing money at $1 trillion a year, and the new commissioner of the IRS has said he's really going to ramp up enforcement. So, it's everybody needs to watch out for themselves. Yeah.
No, it's important. Good. We already have so many negative stigmas, our industry. We don't need the stigma of we don't pay our taxes. We don't need that.
What'll happen is the IRS will go after some big fish, and they use fear to drive everybody else into compliance.
Yeah, they're going to go after someone who like $100 million type of situation or something, or even 50, some crazy number, and a person hid their taxes. That's what I'm feeling too.
They'll do the big guys. The big guys will have negotiated settlements, so you won't know about them. But they'll go after some middle-sized guys. It's because they feel like, oh my gosh, the IRS came after somebody with just like $100,000 in crypto. Then all the small people, which is the vast majority of traders, they're all going to run for cover and fix their returns and start mailing cash to the IRS. So, now what I do is I go back, I do like-kind exchange reporting for most traders who were trading before 2018. A lot of traders thought that because you had crypto-to-crypto trades, you didn't have to report them because you didn't take any money out. That was true, but you actually had to file a form reporting all those trades. If you didn't file it, then you don't get that treatment. So we do the like-kind exchange treatment. Hardly anybody does that. We do a white glove service on that. And if I guess I'd put this out there right now, anybody who's a large fish, if you see yourself as a large fish, you can go to my website at donnellytaxlaw.com, hit the schedule a consultation button, and we can go through your situation. I have, there's no tax return that's too complex for me. I've had traders that are doing $160,000 160,000 trades in a year, people with millions and millions of dollars of income and taxes to be owed, and we go after getting them the best deal we can, getting them the tax return, and that will help them sleep at night. I try to take their tax return and turn it into like an armadillo that nobody can get into it.
I like using me as an example here because I'm a felon and therefore like I'm hypersensitive and know that I'm on like every list possible. So in a situation where someone is worried that, they look at my story, they look at me and they say, well, I did all, I was very involved in crypto very early on. Maybe I broke the law by mistake. And then they're worried that in the course of them filing their tax returns, that could be uncovered, even if it's by mistake or on purpose or whatever. And they're worried that their accountant, now has an obligation to like report the crime. Is that the case? Like, how does that work because even failing to file your return is a felony. So now someone's coming to you and saying, hey, like I broke the law. I committed a felony. I didn't file, right? You probably get a lot of people like that. Every day you could probably get people like that saying, I didn't file for 5 years. So now, like, do you have to, like, what happens now?
Hey, the good news is the IRS loves money. And if you like fix your tax returns and come forward and send them some cash, they will be very nice to you. I have done over 900 tax amnesty returns, and I have 100% success rate. They are really glad to have people come into compliance. Hey, I was talking to a guy who, would be someone who is a well-known person in the crypto space, and he told me that he hasn't filed his tax returns in several years. He thought that that the tax system was a fraud, and they had no right taxing cryptos, and that was his attitude. But
so now what? Is he not worried?
Well, now he's worried because he's a celebrity, and here's the problem: once you take that attitude, it's hard to go back. It's hard to come back from it and do it the next year because it's hard to get current because you got so much that you haven't done before. And this is the problem every trader is going to have who hasn't been even reporting his cryptos, because that Schedule 1 question says, were you did you do anything with cryptos? You say yes, you've automatically indicted your past tax returns. They'll come
So
right
that's
after.
my question. Like, what do you do?
Tax amnesty. Be proactive. Do the tax amnesty. Come forward.
What's
Take your
tax
name off the
amnesty?
list. Tax amnesty is where the penalties for failing to file the anti-money laundering forms is waived. So these penalties, now if the IRS finds out that you didn't file the FBAR form, it's an immediate $10,000 penalty that they assess when they write you the letter. And then when you submit the FBAR, it's a $10,000 penalty per exchange that you had. So and that can happen per year. So and they'll
Wow.
go. So they can be really quickly. They can get up to hundreds of thousands of dollars going after people, after traders, and never have a discussion about how you
Yeah.
reported your trades. Okay, it's all about you didn't tell us you're on Binance, KuCoin,
I'm
Bitstamp.
surprised the IRS hasn't gone to like foreign exchanges and say, hey, if you give us your customer data, you can operate in the US.
Um, because of the Financial Action Task Force and the new anti-money laundering regulations requiring every exchange to be regulated by its own company or country and to comply with the banking and brokerage laws, we're seeing a giant reshuffling of exchanges. We're seeing, I think Poloniex has moved out of the U.S. because they don't want to comply with
Yeah.
U.S. regulations. Binance has broken off all their U.S. persons, and they've created a U.S. only exchange, right? So that business, Binance US, can be fully compliant with the U.S. regulations without having to burden non-U.S. citizens with that. So if that trend continues, I think you're going to see a fragmentation of exchanges, and over time, that fragmentation may result in liquidity problems trading certain coins, because you're not allowed to get on.
Oh,
Because
good point.
it's bad. I mean,
That's a
Binance.
great point. I never thought about that.
Oh yeah, Binance USA, once it gets fully rolled over, people get ramped up on it and stuff. I mean, that's a big section of the market. How much of Binance was U.S. traders? I mean, that's got, I don't know, 40%, maybe more. They have the money, they have the interest, so that creates liquidity problems for people outside of the U.S. And then, but like if I have a Binance dash rest of the world, then that one Binance becomes exposed to having to report things to lots of different countries and information that those countries don't deserve under their regulations. So this is why banks like Bank of America has a different corporation in every single country that it operates in, because that way only that little, only Bank of America in Spain is subject to Spanish regulations. You see, they keep all the Spanish clients there.
We have this negative attitude toward the IRS. Like you're born with it, almost like the tax man cometh or whatever, death and taxes. It's like almost like taught in school books. Is that the right? And now I'm not looking at the IRS as like the centralized thing. I'm talking about the people that work there, the auditors, the inspectors, the special agents, some of whom that I know. Are What type of attitude should we have while we're filing our tax return, if we got a letter and we're writing a letter back, or if we want to engage, like, should you have a hostile and careful attitude? Should you have a friendly? Should you have I want to work with you, therefore you'll work with me? Like, what type of attitude? IRS wants money, right? So we know that they're incentivized and quoted by money. So that's a good thing, right? Knowing someone's agenda is important. But what type of attitude should we have to the IRS?
Well, hey, look, Congress wrote the rules for the IRS, right? So if you really want to be mad at
They're
people, you can
just
be
a
mad at
messenger.
Congress. Right. IRS is delivering. Now, at the same time, when I deal with the IRS, I call the IRS regularly. I treat them with kid gloves. I'm respectful to them because they get treated, crappily by everyone else, and so I treat them with nice. I'm respectful, and they give me a lot of good assistance. I get
Same
a lot
thing
of
with
advice.
the guards in prison that I was in.
Exactly. Now, same thing with the guards in prison. Some of them are absolute a-holes, all right? And they love hurting people. And that's true in the IRS as well. There's people who love to seize assets. And I'm reading some books by some former IRS employees, and there are some sad people. It's a sad culture. However, the new commissioner is working to change that. But we should always take a positive attitude. They're not really the problem, And if you got a negative attitude, you're already setting yourself up for a
Yeah.
problem. When it comes to taxes, our general attitude is not to tell the IRS anything they don't know already. But when it comes to the anti-money laundering forms, you're safer telling them everything because there's safety in big numbers with the anti-money laundering forms. If you said, I had $50,000 on Binance and you actually had 200,000, well, you're exposed. If you tell them instead, I had $500,000 on Binance and it only turned out you only had 200,000, well, you're safe. All right. So
Yeah.
big numbers are in safety on the anti-money laundering forms. And it's counterintuitive, but it's so true.
It makes sense. Reporting accurately is more important than having like the numbers completely accurate, because you can always go and fix those later. But you have, not reporting the existence of an account is super, super important. Is the IRS doing anything like forward thinking towards like crypto taxation? Are there any laws in the books or conversations happening, or like what can we expect? Can there be anything that we can expect to change in 2021? Like what's going on in forward thinking here?
The IRS, the U.S. government is a thought leader in the area of anti-money laundering. And they were formative in the Financial Action Task Force, which is an international committee which establishes the worldwide anti-money laundering regulations. The U.S. established it early, and they support it. So I don't think you're going to see the U.S. step out. Whatever the U.S. does is going to become common to the rest of the world, I would say. All assets, all crypto trades have to be treated as property, which means capital gains. The U.S. government has said that if you hold an asset more than a year, that you get a lower tax rate. It's called long-term capital gains. This is probably one of the biggest tax breaks any crypto trader has. So, we should really focus on that. Some countries are experimenting with long-term capital gains rates that are lower than us. But, I have to tell you, because I travel around the world, I have clients in 48 different countries. The U.S. taxes are relatively lower than most countries, and the IRS is much better in terms of enforcement than in other countries. Just as we have talked about, fintech, and finance 2.0 and everything changing, this technology is also coming to the tax compliance industry as well. I'll tell you, they're moving from taxation by voluntary compliance, which is what we have in the U.S., to taxation that is by design. And I'll tell you about Spain. I spent some time in Spain, and this is something that just to give you. Spanish taxes are higher than the U.S. You're going to pay much higher tax rates, 45%, 50%. In Spain, you have to do all your financial transactions with a Spanish bank. So if you have your mobile phone, you have to pay for it from a Spanish bank. Your rent has to be paid by a Spanish bank. Everything's online, and it's all synced up with your tax ID number. And guess who has access to that anytime they want? The tax man. At any time, they have tools that they can log on, and they can see all the deposits you've made this entire past year into your bank account, and they can see where all your money went to. It's kind of like, I don't know, I have an American Express card, right? And at the end of the year, they tell me, oh, you spent this much at restaurants and this much at hotels. They got like that instant view.
From a compliance standpoint, it's easier, but from like a freedom aspect, it's worse.
There's total loss of privacy. And and then they tax all your income worldwide. So when you file your tax return, they go, no, I can tell you had more money than you declared. You're dead. All right. So the U.S., the IRS is not there yet. It's not as harsh as it could be. They're redesigning it. This might be something that'll happen in 10 years, not sooner than that. But the U.S. is not as bad as other countries. We should really not let those people who like to inflame our emotions get too worked up on that. However, tax rates are higher than they need to be, in my opinion, particularly at the state level. But every trader, but we are moving into a point financially where we're living in greater and greater amounts of transparency, that the government, that the tax authorities can see much more of what we have going on. The days of hiding
that attitude.
changed.
I like that attitude you had. Like, it could be worse. People don't realize that. They think that the rest of the world has cheaper taxes. I was just talking to someone in Canada, and he's like, if you run the numbers, yeah, we have free healthcare, but it sucks, and we pay more taxes than you. I'd rather pay it on my own, he said. So it makes sense. But I wanted to ask you, if you remember, like the earlier bubbles, going back, let's just say we go back to 2013. There was no clarity on crypto taxes. Like no one really knew what to do. I know a lot of people that went in and just kind of like said, all right, I bought and sold a lot of crypto, but I only had one bank account this year. And this bank account earned $1 million. Therefore, I'm just going to pay, short-term capital gains on everything, as opposed to like trying to figure it out. So now these are people that paid a tremendous amount of money in taxes because there was no clarity. So it wasn't that they paid too little, it's the opposite. They paid too much, or they don't know. They think they may have paid too much because they didn't do long-term capital gains. They didn't write off scams. They didn't do a defensive and accurate crypto tax return. More out of fear, they paid too much. Is that something that people should be worried to go back and to amend their older returns? Is that something, because I know people that have paid hundreds of thousands of dollars extra, but are afraid to go back because they're just like, let the sleeping giant sleep. Like, don't wake the bear.
As long as you do an honest and accurate tax return and you report everything, then you should go after any refunds that you can. But you better be, they will look at it. I mean, don't hide anything. So that's what I tell my clients. I had a guy, he paid $200,000 in taxes in 2017. I said, we can file a like-kind exchange and fix that whole thing. And you get that whole $200,000 back. Yeah, you pay more taxes in 18, but far less. And, we can do that and save you a bundle, but you got to be honest with me. And he said, no, I'm completely honest with you. So we do that. I mean, hey, I was talking to one of my colleagues and he's gotten $500,000 tax refunds and stuff. I mean, yeah, they will look at it.
Crypto?
Yeah. No, he wasn't a crypto situation.
Okay.
But
still same type of situation. Yeah.
As long as you're honest, as long as you're rock solid and not try to pull anything quick over somebody, you will get it. Now, the IRS is kind of slow. I will say that, but you will eventually get your money. Yes.
So walk us through that. Like if someone, because I think you don't realize that this is like most people. This is like a lot of people are afraid to amend their returns. A lot of people either pay too much or pay too little, but they realize that years have gone by. They don't want to change anything. So let's just say right now, like February 1st or whatever, someone goes and amends their return. They get a letter in 60 days. Now, what happens? Someone goes and manually reviews that at the IRS?
Every amended tax return gets looked at by somebody at the service center. Now,
it's actually like a good thing, right?
Yeah. I mean, when you file the first time, it's all electronic, and they have programs that go out and look for math errors and unreported income, but it's all computerized. Amended returns, somebody's going to look at it because everything's different. Hey, as long as it's compelling and you put lots of documentation in there and you do it an assertive and well-documented thing, you will get your refunds. And no, I would say, I have counseled some clients. I said, hey, look, you owe $5,000 on 2000, or he owed $5,000 extra taxes on 2015. I said, I wouldn't amend your tax return because let the statute of limitations get to the point where they won't come after you anymore. And it's only $5,000. The penalty on $5,000, this couple. This guy had hundreds of thousands of dollars of taxes.
Sure.
So $5,000 is nothing. Don't bother. Hope that the statute of limitations comes and you don't get picked. And odds are likely that'll happen. But if you have more, I'd say start to go after it. If like this 100,000, I'd go after it. Make it worth your while.
Clinton, I have to say I was worried about doing this show because I wanted to do a tax show for a long time, but after the end of this episode, when the listeners are listening, they're going to have more answers than they have questions. And that was my goal. A lot of times I've walked out of meetings with accountants, with CPAs, with tax lawyers, always with more questions than I have answers. But when you and I started speaking, every word that comes out of your mouth is like very articulate, but also you don't waste words. And I really like that, especially someone who is in a business where it gets charged by the hour. So thank you for doing this show. Please don't invoice me for the show, actually. I just realized.
Hey, thank you very much
Really,
for those
thank you.
compliments.
Seriously.
I appreciate that. You know, there's a lot of emotion when it comes to taxes. All right. As you talked about, people are angry, afraid. Some people are hiding and they won't let anyone know, or they haven't been reporting and they feel they can't sleep at night and they don't like talking about it. Some people feel like, taxes are evil and governments are wrong and there should be anarchy. And, there's, amazing set of emotions. But most importantly, the tax man wants to take a big chunk of your hard-earned tradings, your crypto profits. He wants a big chunk of it, maybe 15 to 50%, depending upon your situation. So taxes is something that we should talk about. We should grow to understand. We should work to get rid of those fears and start to build confidence, because, you spend so much of your money time trying to earn a profit. How about thinking about not losing it to the tax man? So yeah, it's something we need to think about and really, really not be afraid of, but like look at the eyes and not be scared.
There are only two constants in life, right? Death and taxes. We talk about death all the time. We know so much about it. It's on TV. Why aren't we understanding taxes? Clinton Donnelly, DonnellyTaxLaw.com, CryptoTaxAudit.com. Do you have Twitter? Can people follow you on Twitter?
I'm Crypto Tax Fixer.
Perfect. The Fixer. We got the Fixer on the show today, Wayne. Awesome.
Anybody who wants to contact me, they can go to the Donnelly Tax Law website. There just says this blue button says schedule a consultation, and we'll talk confidentially.
And thank you again also for being a sponsor on Untold Stories, making my dream come true here of being able to do this show. And thank you again for coming on the show. And I'll talk to you soon.
Thank you. Have a great day.
Hey everyone, thanks for listening. New episodes of Untold Stories are released every Tuesday and Thursday at 7 a.m. EST on untoldstories.com, Apple, Spotify, or wherever you get your podcast. Untold Stories is produced by Jason Yanowitz, Michael Ippolito, Reed Hannaford, and Riley Silbert of Blockworks Group. Our account executives are Gina DeFelice and Julie Muroff. Our content is written by Kathy Zolo, Ronnie Tishner, and Scott Offord. Special thanks to Wayne Dallaire from Jump Dog Audio Productions. And of course, I'm your host, Charlie Shrem. You can follow me on Twitter at Charlie Shrem to continue the conversation. Send me some messages, feedback, or anything you want to say. And remember, please give some love to my sponsors, and I'll see you next week. Remember, strength in numbers, and information is power.